Hello, very good afternoon to good afternoon to all. Good morning to all. Hello, very good morning to all, and welcome to today's Daily Dose of Market Insights. I'm Kelvin here. Very good morning. Today will be Tuesday, the 4th of March, 2025. So before we start our daily dose, as usual, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, before we kickstart our daily dose of market insight, the gist of it, which is the intraday technical outlook on the broad-based cross asset classes, let's have a recap of what has taken shape yesterday in terms of the important news flow, economic data release, and as well as their impact on the respective intraday performance of the broad-based cross asset classes. So let us start with the major US stock indices first. All right. So we know that yesterday, based on our intraday technical outlook, we were quite hesitant because of mixed element to actually flip back to a bearish bias, even though on Friday the major US stock indices rallied as expected. And what we could see yesterday is there was a force of bearish pressure re-emerge into the major US stock indices, and the culprit was actually the major cap technology stocks, where the Nasdaq 100 was the worst hit by negative 2.2%, the SPX down by negative 1.76%, the Dow Jones down by negative 5%. Pardon me, actually the worst hit was the Russell 2000 down negative 2.8%. So if you look at the heat map of the S&P 500, you see a deep sea of red centering in the mega cap stocks, especially on the semiconductor sector or industry, where NVIDIA, the AI juggernaut, which has a huge significant influence on the Nasdaq 100 and in a way the S&P 500, given its significant weightage, and as well as the overall general sentiment of the US stock market, being that NVIDIA is the top performer driver of this AI optimism performance productivity play that the US stock market has been leading in the last 2 years. All right, so NVIDIA is down by negative 9, almost 9% yesterday. Then what we see over here is that the defensive actually outperformed, where we start to see healthcare has various spot of green in the healthcare sector, followed by consumer defensive, and as well as utilities as well. All right, real estate managed to outperform because the US 10-year Treasury yield actually slid over here. So if you look at the US 10-year Treasury yield, what you could see is now attempting to actually broken below the 4.16 medium-term pivotal support level, and also reintegrate back below this former major bullish flag breakout. And if by the end of this week it managed to recover back above this 4.3% level, so whatever breakout that was seen on 19th of December or mid of December last year exposed US presidential election outcome, this is considered as a failure bullish breakout. So indicating that right now bond prices is actually rising because also of a flight to safety as well, because we know that Treasury yield for bond price rise. So the reason why Treasury yield for a bond price rise is so as a safe haven flight to safety. That means, i.e., there's higher demand of bonds right now, lesser demand for risk asset like equity yesterday because of a potential stagflation risk that may come into play. Okay, why do I say stagflation? Number one, Trump himself yesterday say that very likelihood, high chance that the 25% tariffs on Canada and Mexico were to go ahead today, because today will be the exact implementation date. But we know that let's see how it goes. He may actually change his mind again, but yesterday the market reacted negatively to that, the stock market reacted negatively to that, and we see a flight to safety on US Treasury bonds. That means a push down in yield, an increase in bond price, and he also doubled on China duties that is also due on tomorrow as well. So there's additional 10% tariffs on China products heading to US, potentially taking into effect from today. All right, and on top of this, we call it a negative feedback loop from Trump tariff trade, because that will actually, number one, create supply chain disruption, lead to tit for tat measures from Canada, Mexico, and even China. So that could actually start to see inflation pressure coming back into US, coupled with slowdown in growth because of the supply chain disruption. And also there's pretty much evidence in the latest manufacturing PMI data that was actually out yesterday as well. So the manufacturing PMI data from US compiled by the ISM Manufacturing Institute start to see a slight downtick. So 50.5 was market expected. It came down to 50.3 over here. And what you could see over here is that very interestingly, the ISM manufacturing employment component, that means a survey done by ISM manufacturing purchases manager in terms of the job labor market in the manufacturing sector US is rather bleak. Previously was 50.3, it reduced to a contractionary pace of 47.6. And if you look at the subcomponent called ISM manufacturing prices, so this is referring to number one, i.e. the cost of business inputs for manufacturing businesses or manufacturing industry in the US. So manufacturing business inputs, that means the cost of doing business in the manufacturing sector or industry in the US has been rising pretty steeply from 54.9, market is expecting 56.2, it actually rose to 62.4. So what it means that over here is that there could be a risk that there could be further passed down costs to consumer indirectly, because you know that in order for the business to actually maintain certain profit margin, I got to rise my selling price of my product or services, given that my cost of doing business has increased steeply. So 62.2.4 is the highest level since in almost 2.5 years. So that was the highest since June 2022. So you look at the 5-year trend, all right? So very clearly, there's actually a uptick in business costs for the manufacturing services industry. And with the uptake in business costs, coupled with slowdown in the ISM manufacturing headline number, slowdown in employment of the ISM employment subcomponent, and even a contractionary in ISM new orders as well to 48.6 from 55.1. So that actually spoke market fear of economic slowdown risk in the US, potentially that could actually impact earnings growth as well. So that actually explained the sell-off in the US stock market. And what's interesting over here is that yesterday we also do highlight there's this potential push up or residual movement on the dollar strength setback that could take shape yesterday, which indeed happened, and that also being supported by a better uptick in Eurozone core inflation flash rate for the month of February. So this is a preliminary headline figure for the month of February, core inflation rate. Market is expecting 2.5% year-on-year increase, but it came in slightly higher at 2.6%. So that, but it's still below the previous month of 2.7 because of this slight uptick in actual figure versus expectation. That causes the euro to actually rose over here. The euro to actually rose. That means the dollar actually tumbled against the euro and tumbled against the sterling. All right. So that also came in within our expectation as well. So like recall, this is the 5-day rolling performance chart as we are speaking right now. So let me change. Oops. What is it? Okay, let me change the data. Okay, 5-day rolling performance. Okay, shift it. Okay, let me change the date to 4th of March. Right, so it takes a bit of time. So this is the 5-day rolling performance as of now, 4th of March we are speaking. So we know that the dollar underperformed yesterday against the euro, against the sterling, but right now the dollar is gaining strength against the Canada dollar, also dragging up the dollar strength against the Aussie and the Kiwi, because these are considered as commodities related currency. The Kiwi is not commodity related currency, but the Kiwi movement track closely with the Aussie dollar. Right. So like I mentioned earlier on that yes, the Aussie dollar yesterday we do see a potential bounce. The bounce did take shape on the Aussie dollar. That means the Aussie versus against the US dollar. It hit the set resistance level, and right now potentially there could be dollar weakness coming back into the picture. That means i.e. dollar strength against the Aussie. That means Aussie weakness against the dollar. Pardon me. Okay, so later I'll touch up more about them when we talk about the intraday technical outlook on the FX market. So we know that number one, CAD got hit yesterday, okay, because of the potential tariff that Trump wants to implement fully on Canada, taking into impact or effect on today. So the dollar CAD rally, and that rally also causes the dollar strength to be in the Aussie and the Kiwi. But however, the euro and the sterling continues to remain resilient against the dollar. So later I'll touch on also yesterday the euro and the sterling. Yes, they rallied, but they rallied at a resistance level. Right, so later I'll touch more about that. And what we could see over here is another thing I want to highlight over here is that yes, gold also rallied yesterday by what, 1 or 2%, which we came in within expectation because of that stagflation fear. But from a technical perspective, gold still potential could see some form of residual movement on the downside to work out last 2 weeks plus of extreme optimism that has taken shape on gold. So it's more like a positioning perspective that gold potentially could actually shape a residual down move. But from a longer term fundamental perspective of this stagflationary fear, there is still a reason to actually have a positive view on gold from a medium term perspective and as well from a multi-month perspective. All right. So one more thing to highlight is that yesterday the German 30 actually rallied. So the German 30 broke above the symmetrical triangle range configuration, didn't fall into the lower limit and instead just pierced up a straight line. So the German 30 or the German DAX has a strong outperformance yesterday. So if you look at the performance of the European stock indices, yes, over here. So the German is the strongest outperformer, 2.64%. The Euro stocks is actually up 1.4%. So the reason why the German outperforms so strongly is because of this particular news flow saying that the new upcoming government, because we know that recently German just re-elected a new prime minister, and this leadership of the new prime minister is in favor of infrastructure spending and as well defense spending. So right now he actually mentioned that there could be looming measures to actually implement some special funds to actually fund this defense and infrastructure spending in Germany. So that also causes this is considered as a kind of a physical stimulus measure in Germany, and potentially that kickstart that rally in the German DAX, and also starts to actually see a positive feedback loop in almost all the major European benchmark stock indices. Right. So yeah, this is the news flow that has taken shape so far yesterday that impacted the various broad-based cross asset classes. All right. So with that, now let us now straight away jump straight into the intraday technical outlook on the various cross asset class, starting with the FX market first. All right. So before that, let me expand my screen so that you guys could have a better view of the chart. So let us start with the euro dollar. Right, so we know that the euro dollar actually rallied as expected yesterday. The bounce, the shape, hit our resistance level, and now is coming very close to the top of this 1.0530. So the euro dollar, right, if you look at my chart, I compress it over here. Since the low of 13th of January this year, it has been trading in this kind of ascending triangle range-like formation. This is the lower limit of the ascending triangle. The upper limit is the horizontal resistance that can't break above 1.0530 since late January this year as well, 27 January to be precise. So right now, price action now floated to the top of it, of this potential ongoing minor ascending triangle range configuration, with the hourly RSI now breaking below a parallel ascending trend line. So if I draw it over here, notice, okay, support period, parallel ascending support now turns into a resistance. All right, broken down, and so exit from the overbought region as well. All right, so with that, I'll be using for sure the ascending triangle range resistance at 1.0530 will be my short-term pivotal resistance for today, and I will flip back to a intraday bearish bias for today because it's coming very close to the resistance level, and with the bearish element that's being flashed out on the hourly RSI right now, So that is the odds now seems to be skewing towards more on the bearish camp than the bullish camp based on the current technical elements that is being displayed right now that I highlight to you guys. All right, so 1.0530 short-term pivotal resistance level flip to an intraday bearish bias on the euro dollar within this within this ascending triangle range like formation. Intraday support levels to watch in today's bearish biasness will be 1.042, which is the 20-day moving average. A breakdown below it exposes 1.0390 slash 1.0360, which is also the 50-day moving average as well as last Friday minor swing low. Only a push out and an hourly close above 1.0530 will invalidate today's intraday bearish bias to see a squeeze up towards the next resistance level at 1.0565 and even potentially 1.06 figure level, which is the minor swing high area of 19th of November, 20th of November, and as well as 6th of December. So i.e. using the ongoing potential ascending triangle range stop as my short-term pivotal resistance for today, 1.0530, we will flip to a intraday bearish bias for the euro dollar. Now, next up will be the sterling dollar. So the sterling dollar also hit the upper limit of this ongoing potential bearish ascending wedge-like formation that has taken shape since the low of 13th of January. All right, we hit the upper limit yesterday as well and hit our resistance level. So with that, we will flip to a intraday bearish bias. And also, if you look at the hourly RSI, it also broken down the parallel ascending trend line support over here. All right, and exit from the overbought region. And with this bearish momentum in the short term as being depicted by the hourly RSI, we will flip to an intraday bearish bias using the top of the impending potential bearish ascending wedge formation that is still potentially forming on the sterling dollar. Upper limit will be at the 1.2720, so that will be my short-term pivotal resistance level for today. Flip to an intraday bearish bias. First near-term support level to watch on the intraday basis will be this cluster level over here, or this zone 1.2640 slash 2610. Only a breakdown below 1.2610 exposes the 20-day moving average. We also confluence with the minor swing low of last Friday and 19th of February at 1.2560. Only a push up and hourly close above 1.2620 will invalidate today's intraday bearish bias on the sterling dollar to see a squeeze up to revisit the 200-day moving average, also confluencing with the next intermediate resistance zone at 1.2780, pardon me, 1.2810, which is the minor swing high area of 6th of December and 12th of December. So i.e. in a nutshell, given the bearish element that is being flashing out right now on the hourly RSI, we will flip to a intraday bearish bias, given that price action now is actually hitting the top of the bearish ascending wedge, which we'll be using as the pivotal resistance for today to maintain our intraday bearish bias, which is 1.2720. Right, so that's for the sterling dollar. Onwards next will be the Asia Pacific currency against the dollar, starting with the Aussie dollar. All right, so the Aussie dollar almost hit our resistance level yesterday. Yesterday we do have a bullish bias, came out and did that bearish reaction 62.60. So with that, we'll be using 62.60 for today as my short-term pivotal resistance level. Flip to a intraday bearish bias on the Aussie dollar. Next near-term support level to watch 61.75, followed by 61.40. A breakdown below 61.40 potentially may see a steep down move to retest the 3rd of February minor swing low at 60.90. Only a push out and an hourly close above 62.60, which is so now confluence with this minor descending trend line in place since the minor swing high of 21st of February. See a potential squeeze up to revisit the 20-day moving average, also acting as in confluencing with the next graphical resistance level on the near term at 63 figure level. All right, so i.e. in a nutshell, given the bearish reaction of the said resistance yesterday, we will be using 62.60 as my short-term pivotal resistance for today, and we'll flip back to a intraday bearish bias on the Aussie dollar. Lastly, the dollar yen. So the dollar yen also did a whipsaw at the pivotal resistance over here and came down, plunge, hit our first support level at 48.80.70. All right, so given that this 48.80.70/70 has not surpassed to the downside, I mean, there's no hourly close below it, so I don't want to tighten the short-term pivotal resistance to be so tight. So the first resistance level to watch out for, where during the start of the European session we may see a bounce. Why bounce? Because the hourly RSI now has started to hit the oversold level and stage an exit up from it. All right, so indicating that there's a chance of a minor bounce as we head into the European session thereafter. So minor bounce resistance level to watch out for today will be this minor swing low here, create that whipsaw, and after that it break down and shape that long bearish candlestick, and from there there's a negative follow through thereafter throughout the US session, and only in today's start of the Asia session it managed to survive at the first support level. So this could be a potential first resistance level to watch at 149.95. As long as this bounce didn't surpass above 150.95, which is still remains our short-term pivotal resistance for today on the dollar yen, we will still maintain that intraday bearish bias unless during the European session there's no bounce and there's an hourly close below 1488, 14870, then I could tighten the short-term pivotal resistance to 149.95. So for now, I'm leaving this level as my short-term pivotal resistance at 150.95 based on the current price action of the dollar yen. Below 14870 exposes the next near-term support level on the intraday basis, 147.95 followed by 14710 slash 146.90. Only an hourly close back above 150.95 will invalidate today's intraday bearish bias to see another round of corrective rebound scenario towards the upper limit of this medium-term descending channel, which is at 15165 followed by 15220, which is the upper limit of this medium-term descending channel that is in place since the swing high of 10th of January. All right, and also confluence with the 200-day moving average as well, very closely at 15220. So i.e. in a nutshell, still maintaining that intraday bearish bias on the dollar yen for today. Right, so that sum up the intraday technical outlook on the FX market. So now let us now concentrate on the major stock indices, starting with the Hong Kong 33. So very interesting, the Hong Kong 33, yes, it's negative, it's trading negative right now on the Hang Seng Index, negative 0.45, but it managed to trim today's intraday gap down, right, and almost cover the gap that we are seeing. So still recall that Hong Kong 33, right, yes, we were bearish since Friday, but this bearishness is only a corrective decline sequence within a medium-term uptrend phase that is still intact. Why? Because it's still trading above the 20-day moving average and the 50-day moving average. And we do highlight yesterday that once it comes close to 22,470, we may flip back to a intraday bullish bias again. And indeed, it happened. Yesterday, we were bearish. Support level mid 22,850 followed by 22,470. Exactly. All right, so right now what we're going to do is we will flip to a intraday bullish bias within our longer term view that we have that is still bullish, because what we still see is that the high of 27th of February all the way to the current low, this movement here is not the start of a multi-week bearish reversal scenario. It's more like a multi-day corrective decline sequence within a medium-term uptrend phase that is still intact. All right, so using a slightly lower level at 22,130, so that will be my short-term pivotal support for today, which is very close to the lower limit of this medium-term ascending trend line that I drew from the low of 13th of January this year. All right, so as long as the price action didn't surpass below 22,130 short-term pivotal support level, we will flip back to a intraday bullish bias, potentially kickstarting another round of impulsive upmove sequence within its medium-term uptrend phase above 22,850, which is testing right now, potentially sees the next near-term resistance to come in on the intraday basis at 23,430, unless on the intraday basis it managed to surpass 23,430 during the futures trading session when it reopened during the late European session after the closure of the Hong Kong Stock Exchange cash market. Potentially it will revisit the 52-week high again at 26, which was 23,830. Right, unless we have a price action sudden breakdown and hourly close below 23,130, that would invalidate today's intraday bullish bias and potentially kickstart a more deeper corrective decline sequence, exposing the next near-term support level as it head towards the 50-day moving average next, 22,690 followed by 21,350. So i.e. in a nutshell, given that the said support has already been met, potentially we may start now to see another round of impulsive up move, because the medium-term trend still remains intact on the Hong Kong 33. We will flip to a intraday bullish bias for today using 22,130 as my short-term pivotal support on the Hong Kong 33. Now, up next will be the Japan 225. So Japan 225, yesterday we have a bearish bias. Price action came down and hit the support level, almost hit the support level at 36,750, which is the 1.236 Fibo extension. And if you go back in time, over here is the former minor swing high area of 17th of September and 18th of September, now turns into a pullback support level. Okay, so with that, potentially now there could be some signs of a bounce taking shape, all right, on the Japan 225, all right, given that the hourly RSI also has already exited from the oversold region. So as long as this minor bounce didn't surpass our Titan short-term pivotal resistance for today, also the former minor ascending trend line taken from the low of 28th of February, linking up to 28th of February, now turns into a minor pullback resistance. And if we do the Fibo retracement of the entire sell-off from yesterday's US session high all the way down to today's Asia session low, that also correspond to closely to the golden ratio of 61.8%. So as long as this minor bounce that could take shape because of the hourly RSI hitting the oversold and reintegrate exiting from it right now, this surpass above the Titan short-term pivotal resistance that I have for today at 37,620. Over this level here, potentially there could be another round of bearish leg taking shape upon hitting close to this level. So we will still maintain that intraday bearish bias on the Japan 225 using 37,620 as my short-term pivotal resistance level for any potential minor bounce that could take shape. First support level to watch for sure will be 36,750, 36,750. Only a breakdown below it, 36,750, perhaps maybe during the European session, may expose 37,450 slash 36,500. Can I read out? May expose 36,450, 36,220. Only a push up and the hourly close above 37,620 will negate today's bearish tone to see a squeeze up to revisit 38,020, which also correspond to the minor descending trend line that is in place since 18th of February. Only an hourly close above 38,020, then potentially we could validate another round of corrective rebound sequence to revisit 38,490, which is the minor swing high area of 25th of February and 27th of February. So i.e. in a nutshell, technical elements are still bearish on the Japan 225, but however, on the intraday basis, we may see a bounce taking shape right now because the hourly RSI has really exited from a oversold region after hitting it during today's early Asia session. Bounce resistance level to watch will be at 37,620 thereabout. So this level will be my short-term pivotal resistance to maintain our intraday bearish bias for another round of fresh potential minor downleg that may take shape around this 37,620 short-term pivotal resistance level. All right, so that's for the Japan 225. Now, up next will be the German 30, which is the super DAX, we call it right now. Price action initially, we are looking for a minor pullback towards the 20-day moving average yesterday, but it didn't happen, and immediately the pullback just hit 22,570, never hit 22,270, and did a bullish reversal straight off it and hit our next resistance level, which is our alternative expectation instead, okay, at 23,300 before shipping that minor pullback right over here. So what you could see over here is that the hourly RSI there's no bearish divergence. Okay, there's no bearish divergence over here. There's no bearish divergence, and what we could see is that it continues to trend in a higher low. Right, in fact, it's on support level right now. Okay, so the first support level at 22,950, which is the former minor swing high area of 19th of February, which is the former all-time high, I would say. So I don't want to use 19,950 to be so tight right now, just in case of any whipsaw when the European market opened. So using yesterday breakout point, which is the symmetrical triangle range breakout point, now turns into a key short-term intraday pullback support, 22,730. So as long as this minor pullback didn't surpass below 22,730, if there are any during the start of the European session because of the whipsaw potentially, We will still maintain that intraday, we will flip to a intraday bullish bias for the German 30. Next resistance level to watch will be 23,600, which is a Fibo extension level, taking into account of yesterday's impulsive up move, okay, of 3.68. Right, that above it sees 4.236, which is 23,820, and as well as the 1.236 from a different point of angle. So it's a cluster Fibo extension cluster level, meeting at the same level at 23,820. Only an hourly close and a push down below 23,730, 22,730 short-term pivotal support will invalidate today's intraday bullish bias and also invalidate yesterday's bullish breakout. So yesterday is considered as a failure bullish breakout to see it reintegrating back below 22,570 and even retesting the 20-day moving average at 22,270. Right, so using 22,730 as my short-term pivotal support level for the German 30, and we'll flip to a intraday bullish bias for today. Now, next up will be the major US stock indices, starting with the US Wall Street 30. So yesterday we were neutral because of mixed element, we are unsure. So yesterday what I see is that we see this messy little push up here and reintegrate back below the 20-day, 50-day moving average. So off all the way after that news flow from Trump stating that he will actually impose the 25% tariff on Canada and Mexico product and the additional 10% tariffs on Chinese product. From today onwards, price action sold off and managed to stabilize at the close of US session, right exactly at this 43,120/42,980 again. So why is this level so important? It tested last week twice over here because of this turquoise green line here. So this turquoise green line, if we go back in time from the daily time frame, is actually the major ascending trend line support level from the low of October 2023. So once this line got breakdown, a bearish breakdown of a daily close below this this turquoise green line here, which is the resistance level, the hourly time, which is the support level, pardon me, at this 43,120/42,090, it actually implies the start of a multi-week corrective decline sequence, because this particular support level is being derived from the daily time frame chart. All right, so what I could see over here is that hourly RSI has really hit the oversold level at the end of the US session, and now it has exited from the oversold level. So as we are speaking right now, as we head into a European session, there will be some kind of bounce taking shape on the hourly chart of the US of this US 30, which is the US Wall Street 30, which is the Dow Jones Industrial Average. And given yesterday's steep down move as well, there could be some form of a bounce. And if you look at the 15-minute time frame of yesterday's steep down move, we could see a 5-wave down. All right, over here. Okay. 1, 2, 3, 4, 5. All right, a 5-wave down. And if you do the Fibo extension for that 5th wave target, okay, it's almost one time the 5th wave extension target on downside, hitting the support level as well. All right, so with a 5-wave down, there could be a higher chance of a bounce as we head into the European session and the start of the US session. So bounce resistance to watch, right, will be graphically this level here at 43,530. And if you look at 43,530, if you do that Fibo retracement of yesterday's steep sell-off, intraday sell-off, that also corresponds between the 50% and the golden ratio of 61.8%. All right, so what I'll be doing over here is that I'll be watching for this potential bounce to take shape during the European session, as well as we head into the start of the US session as well. And as long as this bounce didn't surpass the short-term pivotal resistance level at 43,840, we will flip to an intraday bearish bias on the US Wall Street 30. First support level to watch again after that bounce take shape will be at 43,120/42,980. A breakdown below it exposes the next near-term support zone at 42,690/42,570, which is this area, congestion here, 8th of January and 15th of January. Only an hourly close and a push up above 43,840. So this move up, this very short move up, if we're able to surpass above 43,840 again, is very likely coming from Trump, stating that he may delay the tariffs again on Canada, Mexico, and China. So that may spark a very short intraday bullish reversal upwards, exposing the next near-term resistance level, which is the 20-day moving average, acting as a resistance level as well at 44,180 next. Right, so that's for the US Wall Street 30. Now onwards, next will be the Nasdaq 100. So the Nasdaq 100, we would return neutral as well. So it broke below the neutrality zone yesterday at 20,716, and back again it hit the 200-day moving average, which is our support zone next to watch out for, 20,417, 20,335 over here. So if you look at the sharp move down on the Nasdaq 100 yesterday by the 15-minute time frame, we also could see a very clear 5-wave down as well. 1, 2, 3, 4, 5. All right, and the fifth wave target also came close to the one-time Fibo extension. All right, exactly. All right, so what we could see now is after a 5-wave down, in terms of the fifth elliott wave perspective over here, there could be a minor bounce taking shape, okay, over here. So this minor bounce, resistance level to watch will be this graphical level here at 20,716. All right, so if you do the Fibo retracement of yesterday's sell off from yesterday's high, right, that also confluence with the middle of the 50% and the golden ratio as well of 61.8, very similar to the Dow Jones Industrial Average or the US Wall Street 30 that I highlighted earlier. Oops, sorry. So right now, at the start of the European session, as we head into the European session and during the start of the US session, I'll be looking for this potential bounce to take shape, potentially because of the elliott wave 5-wave down, and as well as the hourly RSI now hitting the oversold level during today's at the close of US session, and now has really exited from the oversold session as we are speaking during the Asia session right now. So potentially there's a high chance of a bounce taking shape. Bounce level to watch out for 20,716. As long as this bounce didn't extend and surpass above our short-term pivotal resistance level for today at 21,030, because I don't want to put it so tight at 20,716 just in case of a whipsaw. Very clearly, this is a resistance level because of that inverted V-shaped reversal. So as long as this bounce didn't surpass 21,030, short-term pivotal resistance that we have for the Nasdaq 100 will flip to an intraday bearish bias for today on the Nasdaq 100. First support level to watch for sure will be 20,417/55. Below it exposes 20,140/70, and even 19,910, 19,840, which is this level here, this congestion area here of 1st of November and 5th of November last year. Only a sudden push up and a close above, an hourly close above 21,030. So this only a sudden push up, and this sudden push up very likely will come from Trump himself again, stating that there will be a delay on the trade tariffs against Canada, Mexico, and China, and that potentially could see a squeeze up to expose the next near-term resistance level at 21,330 and even 21,560, which is the 20-day moving average, acting as a similar resistance level as well. So i.e., in a nutshell, there could be a bounce taking shape as we head into the European session and at the start of the US session. Bounce resistance level to watch 20,716 with the short-term pivotal resistance at 21,030. As long as this short-term pivotal resistance is not surpassed to the upside, we will flip to a intraday bearish bias on the Nasdaq 100 for today. All right, so that sum up the intraday technical outlook on the major stock indices. Now let us focus on the commodities asset class, starting with Gold XAU/USD. Those who follow Gold XAU, those who follow our technical analysis on Gold XAU/USD, we do have a bullish bias yesterday. Why? Because of that previous 5-wave down, 1, 2, 3, 4, 5, and that 5-wave down. After that, there will be a retracement, and the retracement did take shape and hitting the 61.8% Fibo retracement. Okay, which is our resistance level that we highlighted yesterday. So with that, we will now actually flip to a intraday bearish bias for Gold XAU/USD. All right, so using 2893/2905. So maybe I'll just put that 2905 instead of the higher limit. Okay, using 2,905 as my short-term pivotal resistance level for gold, and also slightly below the 20-day moving average, I think as a similar resistance level as well. We will flip to a intraday bearish bias for gold for today, XAU/USD. First near-term support level to watch will be 2,860. Let me put it in writing. 2,860. Followed by the minor swing low area of last Friday, 2845/2834. Okay, so these are the two near-term support level to watch for today. However, if a price action breakout with an hourly close above 2905, that would invalidate today's intraday bearish bias to see a squeeze up to expose the next near-term resistance at 2923 and even the current all-time high area at 2954. So i.e. Today we will be using 2905 as my short-term pivotal resistance level, and we'll flip back to a intraday bearish bias for gold, XAU/USD. Right. Lastly will be the West Texas crude oil. So the West Texas crude oil tumbled as expected. So yesterday we flipped back to a bearish bias after that bounce has taken shape on last Friday. Price action hit the first support level and plummeted below it and almost come close to the second support level at 67.96, 67.55. All right, so this level here will be my first resistance level to watch for today, 68.80. And given the fact that the hourly RSI now has hovered in the oversold region, and potentially there could be a bounce taking shape as we head into the European session. So bounce resistance level to watch, first resistance will be 68.77, maximum 69.50 for today. For sure, this is a very clear minor swing low area. Tested one time, tested twice, broke down. After it break, it triggered off that very steep bearish Marubozu candlestick. So this has a kind of important sentiment influence on the market. So this will be my short-term pivotal resistance for today, a tighten one at 69.50. Right below 67.55 exposes 67 figure level next, which is the 0.764 Fibo extension level. And if you go back over here, it will be the minor swing low area of 18th of November as well. Right, so i.e. using a Titan key short-term pivotal resistance level for today at 69.50 to maintain a intraday bearish bias on West Texas crude oil, but nevertheless there could be some sign of minor bounce taking shape. As long as this minor bounce didn't surpass above Titan short-term pivotal resistance at 69.50, we will still maintain that intraday bearish bias on West Texas oil. However, an hourly close and a push up above 69.50 will see a squeeze up to revisit yesterday's minor swing high and last Friday minor rejection level as well at 70.80/71.38, which is the upper limit, which is the downward sloping 20-day moving average, and as well as this medium term descending channel upper limit since the high of 16th of January. Right, so that's for West Texas crude oil intraday technical outlook, and as well as the intraday technical outlook on the broad-based cross asset classes that we covered earlier on. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for or event other than today's we call it an official so-called impending official announcement of Trump's trade tariffs on Canada, Mexico, and China. No time yet has been precisely going to be announced, so likely it could be somewhere between the start of the US session to the middle part of the US session. All right. So other than that, what are the key data to look out for today? What we have over here is that we do have during the start of the European session, not the start, maybe 2 hours later from the European session start, 6 p.m. Eurozone unemployment rate, something to look out for that could impact the German DAX and as well as the euro dollar. And from there, there'll be pretty much quiet, and we do have a couple of Federal Reserve central bank officials speaking on Wednesday, 3:20 a.m. with Fed Williams, and in early Asia session we have RBA Deputy Governor Houston speaking at 5:45 a.m. Singapore time, and also at 5:45 a.m. Singapore time. Yeah, this is a typo error. I don't know why it's appearing over here. This shouldn't be UK. All right, should be this RB. No matter. All right, so that potentially should sum up today's daily dose of market insights over here. And also tomorrow morning, early in the morning, there is the start of the second day of the China 2 session. Also do keep a close eyes watch as well in early morning about 9 a.m. So this is where the Chinese Premier Li, he will actually announce China growth target for this year, and as well as other key economic metrics for China inflation rate, and market will be paying close attention to China 2025 budget deficit for this year, because in the past China budget deficit has been around 3%, and market now is expecting the government of the Chinese top leadership to actually increase the budget deficit to beyond 3%. So market is looking at somewhere between 4% to 6% of GDP when that happened, that actually indicate more physical stimulus got to come into this year to 2025 to maintain the highly expected 2025 GDP growth of 5%. So this announcement will be made at the start of tomorrow Asia session between 9 a.m. to 9:30 a.m., where the second day of the Chinese 2 session kickstart. And also towards the end of tomorrow Asia session, Hong Kong timing, around 4:30 p.m. to 5:30 p.m., there could be a press conference led by Chinese Premier Li to actually have a dialogue with the press regarding about 2025 Chinese economy goal and how Chinese top leadership tend to achieve them. So that could potentially move, especially the China stock market and the Hong Kong stock market, something to look out for tomorrow as well. So with that, that sum up today's Daily Dose of Market Insights. I'm Kelvin here, signing off, and we shall speak again tomorrow. Thank you.